Investing Live European markets wrap. Stocks upbeat on US-Japan deal, currencies mixed. Morning bid, Japan deal electrifies markets.
Crypto today, Bitcoin, Ethereum, XRP show weakness, but rising open interest depicts bullish speculation. Factbox key facts on the US-Japan tariff deal.
Euro-US dollar loses ground with Eurozone consumer sentiment and the ECB on focus. PIOP partners with DragonPay to ease access to the Philippines market.
Positive start seen for Canadian stocks.
Australian dollar, yen, pulls back from intraday highs at 96.65, despite the favourable risk sentiment.
US Treasury Sec Besant, not in a rush to nominate Powell's replacement. Gold price forecast. Gold US dollar eyes triangle breakout. Aims to revisit all-time highs around 3,500 tons.
Flare price forecast. FLX surges 10% as network expands XRP DeFi use cases. The US dollar is mixed in early North American trading after US-Japan trade deal.
Oil prices slip lower. US-Japan trade deal. Crude inventories in focus. Good morning. Please answer the poll before we get going. One more sip of coffee. Does it sound as good as it tastes? Should have made more, that's all I'm saying. 8:29, we're starting at 8:30. All right, good morning, everybody. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. Today we're going to do gold, oil, and Bitcoin. We're going to do euro dollar. We're going to do 10-year T-note. We're going to do the S&P 500. Don't forget about our macro overview and our news update. Without further ado, let's go. Where's the video? Oh, found it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Dollar steadies as markets weigh U.S.-Japan deal. Never risk money cannot afford to lose. Sorry, I didn't mean to talk over myself. Make sure you answer the poll, and meanwhile, let's get an update on all the news headlines that have come out in just the last few minutes. For this, I'm going to have to U.S. dollar step. Refresh the page, I think, is probably the best way of doing it. Then we'll do our macro. This way.
Canada New Housing Price Index, MOM, came in at 0.2%, below expectations, 0% in June.
U.S. dollar steadies as markets weigh U.S.-Japan deal.
Flare price forecast. FLX surges 10% as network expands XRP DeFi use cases. The U.S. dollar is mixed in early North American trading after U.S.-Japan trade deal.
Oil prices slip lower. U.S.-Japan trade deal. Crude inventories in focus.
Investing Live European markets wrap. Stocks upbeat on U.S.-Japan deal. Currencies mixed. Morning bid. Japan deal electrifies markets.
Crypto today, Bitcoin, Ethereum, XRP show weakness, but rising open interest depicts bullish speculation. Factbox key facts on the U.S.-Japan tariff deal.
Euro-US dollar loses ground with Eurozone consumer sentiment and the ECB on focus.
Oh yeah, existing home sales coming out 1 hour, 27 minutes. And then we start PMI season, but that's tomorrow. PMI out of Australia, and then PMI. Oh my. PMI. Currently, Kiwi, Swiss franc looking like a break of resistance, looking for a pullback roll reversal. Cool. Let's do our macro. Let's get our macro on. Baby. So while you do that, let's complete the poll. And it looks like most of you are risk on. And wow, risk off, really? That's interesting. And very risk on. Risk off. Huh. All right. Well, let's take a look. Macro right now, 10-year T-note. Yields going in the right direction, so that's good. That shows healthiness. We're going to look at the 10-year T-note in a little bit. Oil, okay, down below 65. That's also in the correct direction. I'm wondering if it can get to 60. We'll take a look at that. No, we're not going to take a look at that, but we will take a look at gold. Okay, can we get to 35 and beyond? Well, maybe, but so far flat. So far, S&P 500 flat, but most of you guys are risk on or very risk on, and that probably has a lot to do with the deal with Japan, and that would make sense to me. And in that scenario, dollar would weaken, and it's about flat, but at 97.5. And Bitcoin, well, not 125 yet, maybe. Right now, to answer your question or answer the question quantitatively, the market is risk on right now, ever so slightly. We got a score of 2. the hit lists are the same, but maybe the numbers are a little bit different. But S&P 500 creeping back in, and then taking a look at this, this seems to be the same. The big outlier here, especially on a day where Swiss franc is weak, check this out. Aussie Swiss franc is technically bullish anyways. So we have to wonder if this is a change in direction or if it's just related to the short-term news. The Japanese stock market definitely benefiting from the trade deal with the United States and Japan. So Nikkei, hot to go, HOTTOGO. Now, I've already gone through all the risk analysis and scatter plots and money markets and options markets and heat maps and risk gauges on multiple time frames. I already did that. You should swing on by traders.com. All right, so now we're going to go through our fundamentals. And I guess I should go back to the macro side here, right? Like, you should already know all of this. Or specifically, if you're going to do Forex, okay, have data like this. Okay, your thoughts should be organized, right? And you should be opinionated. So now you should already know, are you a bull or a bear on euro dollar? Well, there's the long term versus short term, isn't there? Yes. Now we face this in economics, not just trading, but in economics we have long run and short run. So the question here is, what normally happens to euro dollar this time of year? And then, well, based on what's happening now with trade tensions and deadlines looming, well, what's happening with that euro dollar today, which may be abnormal? Okay, so long run, short run, right? So we zip over and we take a look, and I'm looking at two different types of patterns here: support and resistance patterns, okay, and trending patterns, which are based on more like price action, right? So, anyways, on the daily chart, this is a buying opportunity for euro dollar. Okay, you were given heads up 13 hours ago, and it's still valid, still in play. On a 4-hour chart, what's interesting is we have, see this part here, this part here is this part. So down, 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 and then suddenly higher, high, higher, low, higher, high up to resistance, higher, low, higher, high above resistance, resistance becomes support. And so this 4-hour is now trending the way that the daily would be expected. So that's strength with an opportunity, strength with an opportunity. Oh my gosh! All right. Crypto. Now, we're only going to look at Bitcoin. I had Ethereum on here earlier when I was doing this with the TRADARS team. Same thing, we're going to do support and resistance and trends. So looking at here, remember, we're analyzing the 15-minute, the 30-minute, the 60-minute, the 4-hour, and the daily. There's no 15-minute, there's no 30-minute reliable, repeatable pattern. And there's no daily reliable, repeatable pattern for Bitcoin. So right now we have down into support. So that might be a scalp for y'all, but it's non-directional. It could go this way or it could go this way. So that's going to have to be on your long-term bias. So that's only the hourly. So down to support isn't the world's greatest trade setup, but it is what it is. Came out about 3 hours ago. I'm more trendy than that, so I prefer up, down, and now up. So I'm going to look at this moving average, and if it acts as support, or I'm going to use this, not the bottom of the channel, because if I'm buying, I don't think it's a down channel. If I'm buying, I think it's an up channel. All right, so you can do like an equidistant, or you can do standard deviation channel, connecting this bottom with that potential bottom, or this top with that top, and start trading with the assumption of this one. So I'd rather do that, and I'm not a big fan of that, but it is what it is. which could mean down for a little bit more and then up later. Cool. Let's take a look. 10-year T-note. Now, I could swap this out for Google, aka Alphabet, or Tesla, because we cover those stocks. I don't know if you know that. We cover, what is it, the top 20 stocks traded in the United States at TRADARS? Oh, yeah. You're like, Wayne, I just wish you could do all this for Adobe. Well, we could do that. Wayne, I wish you could do this for Microsoft. We can do that too. But, right now, since this is Forex.Today, we're tracking the flow of capital. And you got to track the 10-year T-note to track the flow of capital. And you're like, really? Yeah, really. Yeah, really. All right, so that's Tesla. Oh, no! I told you I'd do 10-year T-note. Okay. All right, cool. So check this out. Okay. You had roll reversal days and days ago. And it looks like 362 is going to be the next level of resistance and then up. But I think Cali purchased 27% less Teslas year over year. What? So anyways, be careful with your Tesla. So let me show you how you do this. So I go to Tesla and I turn off Google. I turn off Tesla. I turn on the 10-year T-note. And that's how we get that. I'm going to turn off NASDAQ because I only promised you. And I'm going to turn off ASX because I only promised you S&P 500. I'm going to turn off oil because I promised you gold. And I'm going to turn off these like these. So we'll stay with what we have. All right, 10-year T-note. Okay, price up to 112 and down. What? Yeah, check this out. A higher high based on this pattern can produce a lower low. What? So warning, is it a bearish trade setup? No, it's not. By the way, if you want to know how to trade these patterns, there's a free download in the link underneath the video. It's a quick thing. Just name and email, I think, or name and email and location. That's it. And it'll email you the PDF, what you can print out and use as a cheat sheet. And I swear to you that it's not a sales pitch. It's not going to follow up with 27 emails pitching you TRADARS. If you can't see the value here, you're unsellable. Right? Like, dude, I don't need to sell. So you can just have the tool. How about that? All right, 10-year T-note, same thing. Just kind of saying the same thing, slightly different pattern. Higher highs still predicts a higher low. Okay. And then on this one, same thing. So 15, 30, and 60 says even a higher high will create a higher low. Nothing on the higher time frames. Oh my goodness. Cool. Did you know we covered 3 drive emerging patterns, ABCD emerging patterns, and Gartley reversal patterns? And yeah, there we go. There we go, eh? All right, so let's do gold. You like it, the gold? Okay, let's look at gold. Gold doing something similar as that 10-year T-note. On this 15-minute chart, it's expecting a higher high, but very cautious around this 34.5 area for a significant pullback. Now, on a 15-minute chart, everything seems right as rain. An hour ago, you got a heads up to buy a dip, and that buy the dip would be either the moving average or the bottom of the channel with a target here, which is that target. Yeah, this target is that target. So maybe you can buy a dip, let it rip, and then all this suggests is not necessarily selling. What it suggests is take profit. Yeah. Here's a 3-wave correction. Okay. Similar to Gartley, it ends up, okay. This came out 2 hours ago. So even if it made a lower low, okay, expect the higher high. What about higher time frames? Oh, yeah, there's a lot going on with gold. Gold 60-minute consolidation. Okay, this is consolidation. Now, see, if I was a bull, I would look at this as the opportunity. But I should also recognize it could be a threat. So I just got to manage my risk appropriately. So, okay, if I buy this and this is my trade plan, I don't want to be down here. That's for sure. Okay, so I use that as part of my analysis. This is saying just what I said. Even the lower low to this level can still produce a higher high. So I'm okay with that, right? Because to me, on this time frame, it probably is a role reversal. I'd have to be a bull, but we talked about the false rally in this July-August period, so that makes sense. Triangle on the 2 hour, it's just repeating this, just it sees it on the different time frame, but this looks more consolidative, so it's going to take some time. So maybe down until the London close, up for the rest of the week, maybe. Looking at the daily, we haven't breached the high line resistance, but if we did, so here's what I would do if I was me. I would look at it this way and not as a triangle and say, if I'm a bull, then I'm taking this not to just 35, but probably beyond. Okay, daily again, kind of says the same thing. If we can breach the current level of resistance, which is kind of what I just drew, I think what I drew is more like that, but leaves a pullback. And then look at this. Did you see the Gartley? See, I'm not good. I'm not good at spotting Gartley, so I'm sure glad to have, you know, an algorithm do it for me. Okay, lovely to have that. And what does this say? Huh? It says there was a potential around this 3,400 for this to drop to 3,200. But even if it did, the outcome is probably up to 3,500. So that was potential. Remember, this is drawing stuff that hasn't happened yet. It's not even predicting it. It's just saying, did you see that it's possibly forming? But notice we're back. So let me make this a little thicker to differentiate. Okay. We're in this B to C area, and we've decided a higher low, higher highs game. So this potential lower low here relative to B is probably off the charts. This Gartley looks like it's failing, and we're in the business now of buying dips. Oh, that was a lot of detail for gold. Hey, you know what? They just happen to exist. Yeah, there's a lot going on with gold. S&P 500, big day today, maybe a risk on today. Does the rest of the market feel that way? Well, let's take a look. We can do the technical analysis. Well, technically, it's pattern recognition. So we're looking at all kinds of patterns, right? Up, down, and sideways patterns. We're looking for reversal patterns. And we're looking for support and resistance in the sense of maybe like non-directional, but not sideways, like not consolidating, but rangy. There's a bit of a difference, right? And so consolidation, range, uptrend, downtrend, and reversal trends. Oh my God, really? And we're going to do this on 5 time frames? Wayne, that'll take me an hour. Oh, I'm already done. So on the S&P 500, it's bullish with an opportunity done. Cool. Yeah, totally cool. Now, this came out 13 hours ago. So how do you trade it? Once again, check out the file, the downloadable file, the cheat sheet here. Okay. And the simple trade here, like how do you trade it? At the bottom of the channel, on the roll reversal, on the moving average, up. Okay, and then down, and then guess what? We do it all again. We call this price action. Cool. So it's not like that's the target. That's the next leg of the pattern. So this isn't pointing out targets. You are supposed to provide that kind of data because you're the boss. Isn't that cool? Totally cool. Swing by traders.com if you want to start trading like a professional. Every single trade you make will be logical and intelligent based on actual data that we pull from the Fed and from central banks and OECD. And right now I'm working on a project to pull data from the CME group so that we have the Fed Watch tool built in to TRADARS. So you could just, with a quick glance in your daily routine, know how smart money is positioning Fed interest rates in the future. The future. Dude, we're crushing it here. Let's see. We have some performance coaching. Is it Wednesday today? Cool. So we got some price action. Then we got some stock trading, and then that's tomorrow, which I'm going to be able to do. But tomorrow afternoon, I'll be doing charitable work in Chicago for Thursday night, all Friday, all Saturday, Sunday morning, and then I'll be coming home Sunday evening. So I might not get back in time to do the week on the street. But anyways, I definitely won't be around Thursday night or Friday, but I will be here tomorrow morning. But that's that. So thanks for hanging with me. Just log into traders.com. You can hang out with David. Then you can hang out with Peter. Okay. Osamu, I'm trying, man. I'm trying. I don't have an answer for that. I can tell you, though, one of the projects that I've been working on is consolidating all the email alert services so that they're A, better, B, cheaper, and C, more accessible. So imagine there's a version of traders.com in which you never have to log in. So, for example, let me just show you that under fundamentals. And we go to scorecards, and let's do a Forex summary. I'm going to have to just pick one. But, change today by. All right, let's pick a. Okay, cool. So imagine this part was emailed to you the instant it happened. The currency pair Euro-Aussie has a score of 4, indicating that the base currency is stronger than the quote currency. The pair's overall score changed by -5 today. Oh my God! That would have been emailed to you the second that it occurred. Instantly. Okay? That's just one thing. And then pre-London and pre-New York, it'll give a summary of all the things that have changed. Then, pre-New York, you'll get a technical overview of like 12 assets. Plus, we'll every Friday, the second that the COT report comes out, we'll review it, okay, we'll read it, analyze it, and send you the summary of the important things that have changed bullishly and bearishly so that you just get an email And now you don't even have to log in and do that. So you're informed. Now, we have the COT data. Okay. And we have COT training. We have a live group that covers COT. Let me show you, I guess, see all from the past. Here we go. We have a COT review. So now we have a review team. We have the report. And now you can get emailed summaries. Oh my God. Yeah. So anyways, so I'm working on that. And so, yeah, I'm trying, man. I'm trying. There's a lot going on, but it's all good. So thank you for being part of Forex.Today. Thank you for being part of TRADARS. Thank you for being part of Trader's Way. Remember, if you trade through us, you get a spread rebate and an equity boost. And if you're on our prop fund team, that just assumes you're a successful trader. So as you're trading, you also get TRADARS subsidized. Basically, if you're a successful trader, just trade through us and you get TRADARS for cheap or for free. Plus your spread is reduced through a rebate. So your trading is cheaper and TRADARS is free. Sales pitch done. Peace on earth. May the pips be with you. May our profits be above average. Have a